So if you are looking to buy a home, the number one thing that you need to make sure that you get figured out right away is the financing. And in this video, I'm going to break down the three key components that banks are looking at when they are pre-qualifying someone for a home loan. If you are someone who is looking to purchase here in the Rochester area, or this is something that you've been considering for a long time, make sure to listen to this video and watch it to the end, because this is something that if you are not paying attention to, you could be missing out on opportunities. There have been many times in my career where people came to me too little, too late, and I wasn't able to help them because they didn't know that they need to focus on these three things. So without further ado, the very first thing that banks are going to be looking at is they want to know that you have income, and they want to know you have consistent income. There's this thing called a debt to income ratio. So what the banks are going to do is they're going to look at your total income, what you make on a year, and they're going to subtract certain basic expenses, some of your current debts, and there's going to be a certain percentage that they're going to allow you to use for the purchase of a property. Oftentimes it's anywhere between 40% and 51% of your total debt to income ratio. So there's a limit to how much you're actually going to allow you to afford for that mortgage payment. The second thing with income is you also need to make sure that you actually have consistent income. So what I mean by that is there are some careers where you maybe are only working 9 months out of a year and you have 3 months off. Now, this isn't altogether the end of the world. We can figure those things out. We just need to make sure that we are paying attention to a little bit more on someone's taxes and how things work with their overall income. But banks want to know that you have steady and consistent income and you can actually afford the home. The second thing that they're going to be looking at is your assets. Do you actually have the money available for the down payment, for the closing costs, to show that you actually have investment in the property yourself? And again, this is also something that a lot of home buyers really are not really too familiar with, how much they actually need to purchase home. I've had many clients come to me over the years who think that they need to have 20% down to purchase a home, and that is just simply not the reality. Many of my clients have purchased home for 3% down or less. In fact, there is the Minnesota housing loan, which is actually a grant or a loan that you can get from the state of Minnesota for up to $12,500 that'll help you with your down payment and closing costs. In the last month, I personally had 3 buyers purchase using this program, and their out-of-pocket expenses when they closed on the home was less than $3,000. So this is definitely a very real system. If that's something that you want to talk about, reach out to me and I'll explain that to you a little bit more as well. But they want to know that you actually have some investment in the property as well. And the third is credit history. There have been situations in my career where I've had people come to me like, I am definitely going to qualify for a mortgage. I have no debt at all. Well, that's not necessarily a good sign either, because they want to know that you actually are consistent on making payments on your credit history. I oftentimes will recommend people, or when I have situations where I'm representing someone who's 18 years old, which this has happened many times in my career, after talking with me, I can get them on the right track. And usually within 4 to 5 months, they will actually have the credit history available to actually purchase their first home and therefore be well ahead of their peers in the same age group, right? So this is definitely something that you can do. But when it comes to credit history, you need to make sure you actually have a history where you're actually making payments on something so they can show the banks that you can actually be consistent with making those mortgage payments. These are all really, really important things with banks. So they're going to be looking at your income, making sure that that is steady and reliable. They're going to look at your assets, that you are actually going to have some sort of skin in the game on this property that you're purchasing, especially if they're going to be fronting, 97 to 95% of the financing on the loan, right? And then finally, you want to make sure you have consistent history with those mortgage payments. If you want a little more overview of how this all works, or you want to have a conversation with me about some really great loan officers here in the Rochester area who can help you take advantage of some of these really great programs, reach out to me. I am on speed dial with some of these top loan officers here in the Rochester area. They love working with my clients because my clients are educated. I can make sure that you're getting a good deal here in the Rochester area, not just on the purchase price, but on the financing as well. So reach out to me anytime. I encourage you to go look at my online reviews. You see that I come very highly recommended, and I'm in a hurry to serve.